Hey guys, good evening. Hey, I had a few questions about currencies and the Euro New Zealand dollar specifically, but I just wanted to touch real quickly. In the room this morning, I kind of went over S&Ps and what we're doing, but for those that couldn't make it or you're just tuning in here this evening, I just want to touch on a few things in S&Ps and then I'll just do a quick update mostly on currencies. So. I like to follow this 8.6 count. The global business cycle is on an 8.6 count as far as 8.6 years. And that rhythm, that wave structure is true on pretty much every time frame. But I like to look at it on the daily. And this most recent, it's 8.6, so it's an 8 to 9 trading day count is kind of how you look at it. But you can see that there's a pretty decent rhythm to it. All right, cycle high, cycle low was the low of this move. Cycle high produced the high 2191. We cycled back to the low close here on October 26 or August 26. All right, another 8 count back into the highs around 2191. All right, and then this move down. September 19th, finished another 8 count, and we're about 5 days into this next cycle. So based on where we failed up here, guys, around the 30-day, and the fact that the slow stochastic rolled over, I wouldn't be surprised if we have a 2 to 3 day further drop into the low end of this cycle and finish out this 8 count, and then maybe we see a turn in the markets again. So something to think about. All right, but that just gives you points or turns in the market. Those are points in time. It doesn't necessarily give you highs or low. It's just a rhythm. Okay, so what I really care about most recently in S&Ps is this 4-hour. And so you guys know that we were buying puts up here. We sold some futures into this area, but I really wanted to see if S&P's rejected pi in the 200, and we did. So it made sense today, after coming all this distance from late last week, back down to the bottom of the, this cycle here on the 4-hour. You should get back some futures or take some profit on your puts. Okay, and then from here we'll see if we hold this trend line. So far in Tokyo here, looks pretty weak, so obviously we got the debate tonight. Maybe that puts some volatility into the market, right? Depending on how well Hillary does. But if we bounce back here, don't be afraid to resell the next bounce, as long as we're south or below this low. Okay, this is a nice lower high. It was basically right in the spot that we thought we would get it. And so from here, if we don't really hold this trend line and we finish off another 2 to 3 days lower to finish off that daily cycle, this thing could go no bid quickly. But if that does happen, you have support here at 21.27, all down in here, call it 21.10 to 21.12, and then obviously the lows down around 2100. So those are 3 good spots to take some profits if we keep selling off. And then again, we won't be afraid of the next bounce to sell. Okay, if this 4-hour comes back up, and let's look at where the hourly cycle is. It's pretty low right now, so this can come higher. All right, so just pay attention to that in S&Ps. And then I had some questions about New Zealand dollar. So this is one of my favorite trades long term. All right, there's a great carry here, and the weekly chart. Let me take these drawings off. But you guys heard me talk about this. I like how the bands rolled over. We broke this wedge pattern. So we're largely just kind of going sideways, but I think there's a lot of room that this can go lower. So all the wave structure looks pretty nice. All right, so most recently, we've been kind of shorting this bounce on the intermediate term. And I like to really start my swing trades, or maybe not necessarily start them, but the majority of your move where you're going to make most of your money is when this daily cycle rolls over. All right, and you capture this chunk of time. So you can see here, the last time the cycle rolled over, it was 1, 2, 3, 4, 5, 6, 7 days lower before it turned again. And that's almost the same as that 8.6 count. It's a similar kind of rhythm. All right, you get another one here. Okay, when this crossed at the lower end of the cycle, it was 1, 2, 3, 4, 5 days up. All right, so I'm still waiting for this to cross, and then you can get more aggressive on the short side. So what I like to teach is that when you're early, try to think about your size of your total position of only being short 20% of what you normally want to be short, and then try to get more aggressive on the right hand side of the chart. And what that will look like on the 4-hour and hourly is the trend will start to move back negative. Okay, so here the 8 is rising, which is showing you, and these bands have flipped back bullish. Now price is below pi, or in the southern hemisphere, and yeah, it popped above it a little bit, but it's all relative, guys. I mean, this is barely making a new higher high above here. Okay, and on the daily level, 156 is really the TMS. So it's these highs, and the band structure here is all 156. So don't be afraid. That's what I was saying, that I've been shorting a little bit earlier. So here's our last few trades, right? Short, 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 cover, cover, short, cover, short, short, really short. Hit it hard up here and had a nice flush. Now it's the same process again, right? So still being patient, a little bit out of the money. But I was saying that don't be afraid, and maybe we'll get a move back to 156 as this daily cycle has not finished. Okay, so the 4-hour, you're just still kind of in patient mode. Now I like the fact that the 8's rolling over, and what that is showing you is that the hourly is starting to move bearish. Okay, the cycle actually diverged and started to roll over first before price action rolled over, and that divergence is telling sometimes, so that's okay. That's a good sign. And then the questions I had today was, well, is it time to get aggressive on the short side? And it's close. And you can be. So here on the hourly, though, don't lose sight that the bands are still bullish. Okay, now this 30-hour is starting to roll over. So I'm okay with you hitting some bids down. Okay, it's really hard for me I don't have my drawing tool. I need to start doing these with the GoToMeeting. Did you guys see this higher low here, right at the 30-hour? I'm okay with you calling that new lower lows once that broke. This is kind of a lower low. But I sold here, so I actually covered some today because this was a decent move down. The cycle was kind of low. But you can start getting more aggressive now. I'm fine with that. I mean, you see how this hourly crossed? So what you want to do then is start moving in, and these are some of the setups that I teach in the coaching. But you see how this 8 is starting to kind of roll? So you can pick your points in here, where if you want to get more aggressive on a candle or two, so you see that the hourly crossed. Maybe you want to sell, let's just say that swing trade, if your maximum position is $1 million on average for a trade or position you would have swing trade. Well, if on this side of the chart you're selling 10%, 20%, 30% lots, 200,000. This was just starting my trade. So I'm not afraid to go over a little bit more than $1 million. But just say for the example that you're short $1 million is usually your max position. Well, sell 100,000, sell 100,000, sell 100,000, or sell 300,000. And when you get on this side, hit it with another 300,000 or 400. And then, okay, that's going to bring your average nice and, if you sell 100 here, ignore my numbers. If you sell 100 here, 100 here, 100 here, your average would be right about where mine is right now. And then that allows you to kind of sit through this. If it went to 156, you could keep moving this average up comfortably. But then as it rolls over, if you sell another 300 right here, guys, look, your average is not going to move. It'll actually probably move up right to where you sell. And then on that 300 piece that you sell, just put your stop right above that high or this high. So when you're increasing your size like that, here you're selling 100, here you're selling 100, here you're selling 100. Here you sell 300 or 500. But when you get heavy, you're only risking one candle. Okay? Then if it moves in your favor, you take some off. Then when it bounces, maybe you get more aggressive. Now you hit it with 500. Put your stop above the pivot high or above that high of that candle. And it doesn't mean it takes you out of the entire trade, but just get used to when you put on big chunks, only risk one candle for that chunk. Because we're trying to risk one candle to make 30. And that's how you're going to keep yourself with the right risk reward. And you're going to have nice, long, profitable trades. And when you lose, your risk is small. Okay? So it depends on how tight you want to keep your risk and how aggressive you want to be. But if, say, you just sell 100 here, 100 here, 100 here, and then you just feel like selling another 100 here, well, maybe you're okay with another bounce against you then, because you want to sell 300 to 500 back on this side. If that's the case, you sell 100, and you don't worry about taking any risk off unless you get back above these highs. So you could even put your stop in for 100 or 200 up here. All right, so this is kind of the art of this size that I'm trying to teach everyone. And there's only so much I can do in the free videos, but this is where I would really encourage you to do the group coaching, because you're going to start to get this down. And I'm telling you, when you get the art of the size down, you're going to be amazed at how much your win rate goes to 80, 90%. You're hardly stop out. Because when you try to do this on your own, there's going to be times where you're just way too early with too much size because you're new at this style of trading, and you might take some hard, bigger size stops. That is what it is. So the group coaching, guys, it really is not that I mean, $2-3 grand, depending on what discounts we're running at the time. Like for those that sign up early for October, it'd probably only be $2 grand. And the amount of hours and training that you're going to get, and the active trader membership, which is $1,000 value. I mean, you guys learn a way to trade for a lifetime is more than worth $3 grand. I mean, when I learned to trade Forex, and I didn't know anything about it 10 years ago, I paid 12 grand, and I didn't get any of this type of teaching. It was just the basics of what is Forex, bid and offer, simple stuffs on the chart. I spent 12 grand, guys, I'm telling you. If you really want to pick this up quick and you really want to work it and take your trading to the next level and reach that level of mastery where you have consistent profitability, that's where you're going to grow the most. But hopefully that helps, guys. And then you can go to the site if you want to sign up for the group coaching, or you just message me in the room and I'll get you squared away. But other than that, guys, enjoy your evening. This debate should be interesting, and then I'll cover some more currency markets in the morning. All right, we'll talk to you.